Hello everybody, welcome to your hump day. It is Wednesday. It'll be a great trading session out there. We are seeing a little bit more movement in the market. I like the waves today. Yesterday was kind of a flatter day. Today we had some nice expanded range candles on our major market indexes and maybe a little bit of weakness in the crypto space. We'll talk about that. But first, a shout out to everybody. Hello, everyone who's joining us today. I see some new names in here. So for those of you who are new, I would encourage you to click that subscribe button that's on the front page right there of a YouTube video. Also, as we progress through today, just know it's fully interactive. We got a pretty active group in here as well. If you have a question, you want to go directly to me and make sure that I can catch it, because a lot of times there's a lot of chat. Just put question marks in front of your question. That way, when I scroll through, I can find it very, very quickly. Yes, Big M says Tilray up 67% today. Yeah, boy. Rocking. The whole MJ space has been booming. And there's actually a question about that today. All right. No, Elon Musk, no Dogecoin. I'm going to start there, though. I received a bunch of comments and questions about yesterday's show on Dogecoin. And, you know, obviously there's people who are big fans of it. There's other people who think that it's horrible and it's all one big scam. But there were a couple questions that were particularly pointed, and I wanted to go to this one from Clint. So Clint, thank you for giving me the feedback on the YouTube page. I do appreciate that. Here is the comment that he put in. It wasn't his question, it was just a comment. It says, Peter Schiff says, all of those Bitcoin bugs like Novgratz criticizing Elon Musk for promoting Dogecoin can't see the irony that there is no substantive difference between Bitcoin and Dogecoin. In fact, Dogecoin, despite it being started as a joke, is arguably the superior cryptocurrency. Now, again, if you look back at my premise from yesterday's show, it's that there's three main groups of crypto, and I'm hoping everybody, I know you're probably sick of hearing me say it, but I want Clint to understand this very well, and Peter Schiff also. Bitcoin is not attempting to be the transactional component. It's not attempting to be a digital currency. It's not attempting to be the, as it says here, the superior cryptocurrency. It's really the store of value currency. So you have your gold, right? That's Bitcoin. It's not going to change. You have your transactional one, which I pointed out would probably be something like the EOS, which I think has much more transaction capability than Dogecoin. And Dogecoin isn't doing any transactions anyway. 100,000 a day. Snooze fest. So to say it's a superior cryptocurrency, I guess it all depends on its purpose, right? It depends on its function. If it's about being a programmable blockchain, then Dogecoin's not it. Dogecoin don't know. It's worthless in that area. So again, we have to pick which segment of the market we're looking at when we decide to buy into crypto. Is it a project? Is it a currency? Is it the store of value? Those to me are the three main groupings here that I look at personally, and we've got others here as well. So Brennan, you know, if you have maybe a fourth or fifth component that you think is the direction that crypto is heading, let me know. I'd love to hear from it. But I think number one, it's going to be that digital gold store of value. That's Bitcoin. It's going to be the programmable blockchain where everybody can plug into that resource and utilize that blockchain. That right now is Ethereum. Binance is also doing some good things in that space, but it's really Ethereum at this point. And then you have transactional, which, you know, you have scalability. There's Lisk, there's Neo, there's EOS. You know, those are much better from the amount of transactions that it can handle, and to me, those are better alternatives than Dogecoin. But you know, Dogecoin might make it down the road. Who knows? Just right now, it's not the leader in any one of those three categories that I mentioned. It's not even close to being the leader of it. All right. I'm going to start right off with this question from Les at the very top. He says, first question of the day, how and where can I purchase EOS if I wanted it? And Brendan responded back, it's on Coinbase, but now you're hearing about problems with people opening up Coinbase accounts. I just think because they're flooded. We mentioned that yesterday. You can also buy it on Kraken, right? That's another U.S. exchange. You can buy it on Binance as well. That's where I'm trying to remember where I originally got it. I think I originally bought EOS. That's why I opened the Kraken account, because a couple years ago, that's the only place that I could get EOS. So I bought a bunch of EOS on Kraken, but now you can get it on Coinbase. And I'll give you an example. I still have this platform up and running here, so let me just show you. This is Coinbase Pro, and I think it was either Big Eb or Tom. One of you were saying something about how, there was a question a couple days ago. Maybe you guys can send it back in again. Was talking about buying cryptocurrencies and how it kind of felt uncomfortable with the platforms. They just didn't seem right. You know, that's why I like this pro.coinbase.com, because it looks like a regular trading platform, right? It has all the same basic functionality and bells and whistles. It could be better, but it's simple. It's an easy interface. Les's question, where can you buy it? Well, if I wanted to, I could go here to right at the top. It shows all the different asset classes. So you see there's one that says EOS USD. I click on that, and right now, should I want to, I have 9,000 in this account. I could just limit buy order, market buy order, stop losses, whatever I want. There's your price chart of EOS. So right now, EOS, because it's one of the more mainstream ones, it's acceptable or accepted and traded on just about every major exchange around the world. The challenge is you have to open an account with one of these firms, and right now it seems like that is becoming a little bit problematic for people because of the flood of individuals trying to open accounts there. Okay, I thought I saw some question marks in there, but maybe I didn't. I was just imagining things. All right, let me go back to some questions. So for Clint, I appreciate the feedback, but I think that there is a massive substantive difference between Bitcoin and Dogecoin. Making that statement, this just tells you how ignorant Peter Schiff is if he made this, because saying that those two are the same is like saying that a Ferrari and a Toyota Camry are the same. They're not. They're completely different, right? There's different functionality, there's different features, there's different processing times, there's different supply. Another individual yesterday commented this. He says, "Oh well, they issue 5 billion new Dogecoins a year to accommodate for all those people who have lost their private keys." If you're accounting for, and right now there's 124 billion Dogecoin out there, and it was originally supposed to be 100 billion, that means you're assuming that 24 billion people have lost their private keys? That's 20% of supply. Either your consumers who are holding it are just such complete idiots that they can't keep their private key, or that math is wrong. I would contend that it's not the $5 billion emission of new Dogecoin per year is way more than needed to accommodate for lost ones. And part of the reason you want them to be lost and limit supply is because it will help grow the value of that asset. That's part of the draw, is because you have an efficient functioning system, because the miners are rewarded for their actions, right? They're going to get paid over time for keeping a robust network. With Dogecoin, you're not going to get the attraction to it because it's not going to be appreciating as much. And I say that, you guys have seen 1,000% move, but I don't think long term you'll see the appreciation anywhere near what you would with Bitcoin because of the supply problem. Big Eb, where was it? No, Batista says, how can you transfer to a wallet from CoinPro? Okay. I'm hoping that I don't show too much here. I might have to test this one out first, but let's go to Coinbase Pro, and I'll show you that one here real quick. So here is your Coinbase Pro account, right? And let me go to something that I have enough of. So here's Litecoin. And you can see my balance of Litecoin. Right now it's 304 Litecoin. If I wanted to, you can see here it says withdraw. It's a simple button. It just says withdraw. All right, so you can click withdraw, and once it takes a minute here, I can point and say which one I want to withdraw. So I want to withdraw Litecoin. And then it'll just ask me, where do you want to send it? I can send it right over to Coinbase immediately, or I could send it to a wallet. And all I have to do is click on this, and it will tell you, to put in the field here. So here's, where do you want to send it to? That's this enter Litecoin address. And that's how you would send it. It's that simple. Just make sure, and I've told you guys this many times, when you are sending, copy and paste it. Big Heb echoed my sentiment right there. Copy and paste that key, the address, and always check that you have the first few digits, I do the first 3 and last 3 of the destination address, because you leave off one letter, it's gone. It won't work, and you lose that. As Big Eb says, always start with a small one, right? So if in this case, would I send 304 Litecoin right now? No, I would not. I would probably send half a Litecoin or 0.01 Litecoins. You can send a small amount. Send it to that address first. Wait for the confirmations. Wait for it to get there. And then once it's received, I would send a bigger batch. And here's the other piece I want you to notice on here. Coinbase actually tells you, you see right here it says processing time, 12 confirmations. So this is them saying we want to wait 12 confirmations until we actually will confirm that it's going to be out of your account. To me, that's important, because if you think about how long it takes for Litecoin, it's 2.5 minutes per block, per confirmation. So what you'd end up with is, let's see, it says 12 confirmations. That means it would take about 30 minutes for you to have it fully moved over to your new address. The system and network guarantees it. This again goes back to part of the problem I see with some of these cryptocurrencies is they just don't have the transactional settlement speed. Again, if you're using Litecoin, which is 4 times faster than Bitcoin, and I'm buying food at a restaurant or buying a ticket at a movie, I gotta wait 30 minutes for that thing to settle. That's just not gonna cut it. So, yeah, Brendan says you might pay a little extra in fees, but it's worth it. Absolutely, guys. 100%. Don't worry about spending an extra $3, $4, $5. Make sure that it sends and receives. I never send a big block of crypto ever without sending a small sample first. Our order flow is the same across brokerages, i.e. Thinkorswim, TradeStation. Who gets filled first? You're referencing equity markets, I presume, Ivsy, or futures. It all depends on those relationships. If you're looking at speed of market, if you're looking at how fast orders are processed, it's a combination of several different things. Number one is going to be co-location, meaning how close are the servers that you're trading through? How close are they to the exchange? So these high-speed networks, these high-speed algorithms and HFTs, they're co-locating literally in the machine directly next to the exchanges. They're paying a pretty penny for that privilege because it's less distance traveled, and while it may not seem like much, a nanosecond in the equity markets can mean a lot of money, especially if they can see your order and jump in front of it using that co-located server. For us, it's pretty much going to be the same. You'll never beat an HFT because, again, they are paying for the co-located servers. Depending on who you trade, I think to me, it's not as much an important question of how fast the transactions are. It's more a question of what happens to your order flow. So, for example, if I'm using Thinkorswim, am I using their direct access platform, and I'm using TradeStation, those are theoretically connected directly through to the exchange. So I'm circumventing the middleman. And I'm not in a situation where I'm selling my order flow to somebody else. That, to me, is the big problem here. Robinhood, those guys are selling orders. If you're a retail customer of some of these online firms, you are potentially getting your orders received by that firm and then sold to somebody else. And that is a much bigger cost than maybe the half a second it's taking a delay between one brokerage firm and another. To me, that's the bigger problem, would be how quickly, not how quickly the orders are sent, but what happens to the order flow. This has been my big gripe against Robinhood from day one, is they're very clearly selling order flow. Free is not always free. And that's something that Robinhood has been having to contend with now, is that people are becoming more aware of it. This is something anybody who was in the know about financial markets, they knew about this since the very beginning of Robinhood. When they said free everything, all right, it's not really free. And you're hearing a lot of brokerage firms now are saying, free trades for equities. Yeah, they're making money elsewhere. Charles Schwab has already said where they're making that money. They're not doing it necessarily on selling of order flow, which I'm not saying that they don't, but they're really trying to point the finger at the debt side, meaning they're keeping that capital, they're earning interest on it, and they're earning more interest on their lending or of your assets than they're paying you, and that has been making them money there. So that's how they're giving you free commissions. Brennan says, what do you think about Global Prime as an FX broker? Don't know. I don't know much about Global Prime, so unfortunately I can't answer that one. My bad. Don't miners get paid for processing transactions on the blockchain? Correct, they do. The miners are rewarded with fees. So the fees that are collected goes to the miner that solves that block. So not only do they get the block reward, so in this case Bitcoin, is it 6.5 now? Or 6.25? I think it's 6.25. It was 12.5, and then I think it went to 6.25. I haven't even followed the mining. They get that reward, and then they get whatever fees are collected in there. So that's how they do it. All right, let me scroll up here real quick. I want to make sure I get some questions. So Ivsy or Ivs, are they the same across all brokerages? No. The order flow can be sold. Some might be faster than others. And here's one thing I highly recommend. When I was very, very active, I'm no longer that active anymore, meaning doing high-speed day trading. But what I would do is I would actually have a level 2 screen of, let's say, CyberTrader, which is one firm that I was using. And then I would have, On-Site Trading or Terra Nova or some other one. And I would look at their level 2 screen. And a lot of times those level 2s would get out of whack. And you'd have to kind of go, okay, because I'm seeing this disconnect in data and quotes, I want to take a step back just because one of them's wrong, and I might be getting slippage on one of them and paying the wrong prices. So to me, that's just a warning system for me back in the day on the old trading floor. Okay, let's see. What's the difference, or the difference between the bid and the ask? Yes, correct. Important question. The baseball season coming up, is a hot dog a sandwich? No, it's not a sandwich. Are you kidding me? It's a hot dog. It's right in the name. Oh, Alex, baseball season's coming. Go Giants. All right, let me see if I can get some more questions in here. So we talked briefly about the Dogecoin thing. Again, I hope that you guys found that informative. It was exciting for me. I might actually do a show that much more clearly defines those three market segments, and then I'll do a breakdown of each one of those segments, meaning programmability, transaction, and store of value, and see where we go from there. All right, this is a good one. Heather says, I've been waiting for MJ to sell off to buy some. Where, when, and how would you recommend to get in? Okay. Whew. Jeez, you want me to do all the work for you out there, Heather. There's a lot of components to this one. Let's bring up the MJ stock, and there we have the ETF, the Exchange Traded Fund for MJ. Right now, I will say this, it looks ripe for a pullback. I mean, it really does feel like it's going to pull. Look at the volume today. Average volume is roughly 3 million shares per day. Today it traded 17 million. Oh yeah, that's climactic volume. And you know I love climactic volume. Normally when you see an outlier of volume that's that big, price usually turns within a day or so. So you notice here you had this huge spike up. The next day you gapped up, and then it sold off pretty good over the next few days from almost $15.50 all the way down to about $12. There's a $3 gain there in just a couple days. Yet another one here, which was really just this big gap up and didn't sell off. Today, we had the huge volume run up. We'll see how this pans out over the next couple days. But to Heather's question, what are my thoughts on where, when, and how would you recommend to get in? Buying in right now, obviously, is chasing it. I would certainly not encourage you to buy in right now. I have to ask the question, though. Reddit's pushing Cannabis right now? Well, shocker. There we go. You have to ask the question, at what point would you like to be a buyer? That is the question you have to ask yourself, Heather, here before you can say, where, when, and why, and how, and who to get an MJ. So I would look at it from this perspective. I really like the way that this has the last 3-day breakout above, call it 2340, right? That little area there. Maybe I can, if you're OTA fans, I'll draw a picture. I like to draw pictures, Lenny. You got this little yellow box, right? That's an area where I'd probably be a happy buyer on it, right? So what you could do, even though it's at $33.21, you could potentially look at that as your buy point, right? So you got two choices here, Heather. Well, there's multiple, but there's two came to the top of my mind. You could, if you wanted to, obviously buy MJ right now, and I would not recommend that because I feel like you're chasing it, and the way the candle's structured today, and the volume, it makes me a little skeptical in buying, especially after such a colossal run. The second way you could do it would be to wait for it to fall all the way down to, let's say, I'm going to call it $24. Let me just change this line here so it reads right, and you guys can see my numbers on the screen. Let's wait for it to fall all the way to $24 and then buy in. The problem with that is if you look at it from current prices, it's roughly, I don't have Snap on here, so it's going to be roughly a 27% drop. So you're waiting for it to drop to 27% before you buy in. Look, it may not drop 27%. It might not. So what we can do is you can get paid to do this. So let me bring up an options chain for you, and let's just hypothetically map out a trade here. And here's MJ, and it really depends on your time frame. You could be doing this for the next 8 days because you have the February 19th contract about to expire. But let's say you went out to March, all right? And we unfortunately, guys, this doesn't let me change the font size in this one, so I know it's very tough for you to see. I apologize. I will do my best. Let's say you wanted to buy it if it drops to 24, and I'm going to highlight this column right here. You guys can see it. It's trading at $1.60 by $1.85. What that means is you could collect somewhere between $1.60 and $1.85. Let's call it $1.70 per options contract. And what that would tell you is if you did that one, it's saying that you would collect $1.70 per share, and since an options contract is 100 shares, you'd be collecting $170, and you'd be committing yourself to buy. It's basically saying if it drops to $24, you're a buyer of this one. It's going to be shares will be put to you. I don't think that that's a bad deal, right? Because if you think of the math here, and it's $24 is the strike price that you're doing the option at. You guys can see that horizontal line. That's $24. If we sold the 24 put, we'd be collecting $1.70, which really means that if you were executed and the shares were put to you, your average price is $22.30. That's not too bad. Let me see where that line lines up here, which is probably right near the bottom of the demand zone. Yeah, it's down below that demand zone. So to me, that might not be a bad thing, right? To be selling options here. And of course, you don't have to go all the way down there. I saw someone in here, I think Koja said $20 looks good, but it may not go there. This is the beauty of options, my friend, because let's just say you wanted to do the 20s. Now, obviously, you're not going to make as much. You'd make between 75 and 90 cents, so let's call it 80 cents just to make it an even number. You would get $80 for every contract that you sold, committing yourself to buy if it dropped all the way down to 20. It might not get there, you're right. But you could be paid for the next 30 days. To me, that is probably, to Heather's question of when, where, and how, that's how I would do it. I wouldn't buy right now. I think that's crazy. I wouldn't feel comfortable just waiting because now I'm wasting time and capital. Your premium is very good today. Yes. And, when you have volume like this and such a huge move, MJ was up 20% today. That's pretty good. So why not? Why not, sell some options here, sell some puts, collect some premium, and if it continues to rally up here, all you can do is look in hindsight and say, damn it, I wish I would have bought it at 33. But to me, that's aggressive. If you sold those put options, for whatever, $24 and get the $1.70, or you sell the $20 put options and collect yourself 80 cents, you're still collecting some premium, and if it does move up, you are making some rate of return. To me, that's what we should be doing here. Now, could you go up higher? Certainly you could. Let's just take a flyer here. I'm really curious to see. I closed out the option chain already. Smart guy over here, Merlin. Anyway, hopefully that helped you, Heather, in understanding a little bit about how, when, and where, and why. Okay? Where, when, and how. I'll answer those three specifically. Where, I would probably be looking to buy if it dropped back down to 24. When, I don't care because I'm going to sell a monthly option that expires in 30 days or less to sell that put right here at that $24 mark. What was it? Where, when, and how? How? I'm going to be using options, period. All right. Yes. And Jerry, that's why I like it. For those who are OTA members, this little yellow box here, it's technically what they would call an RBR in core strategy, and I'm a fan of that one. I like it. It's still pricey. Don't get me wrong. Think back in October, MJ was trading down in the $10 range. Buying a pullback into 24 seems still elevated, but my optimism on the industry and just what it's been doing lately, I'm very bullish on it, and I think that you'll get a pullback. Hopefully it does get down to 24, and I may actually make this trade. We'll see. Oh yeah, I have one quick announcement I have to make. I totally screwed up the other day. I'm going to be on the East Coast on Friday and Monday, so I said we're going to have Don Front on the show Friday. That's not going to happen because there's no show on Friday. So I'm trying to get Don on for tomorrow's show, but there'll be no show Friday or Monday because I will be on the East Coast. Okay. Yeah, I decided to chase a storm. That's what I wanted to do. All right, everybody good with that? I know we've got most people here are familiar with the puts and calls side of thing, but is everybody who is not familiar with it, is that clear? If it isn't, let me know and I'll try to explain a little bit more to get some clarity to it. All right, well, then I'm going to go to listener questions. Let's keep on rolling. All right, too bad I don't have Larry Jacobson because Larry Jacobson was the guy telling me to buy Nvidia when it was at $36, and I was like, I don't know. Nvidia, been pretty phenomenal. Here is a question from Keith. Where's Keith's question? Was thinking of shorting NVDA at these current highs. Thoughts? All right, let's check that one out. Nvidia has been damn good. NVDA. You're hearing more and more talk about supply chain disruption, right? You're hearing more talk about chips being an issue, and of course, chips is a major element of what Nvidia is doing. And plus, there's more push for electric vehicles, autonomous vehicles, self-driving vehicles, and Nvidia is at the forefront of that as well. So, if you take out the fact that this is Nvidia, if you take out that simple fact, which is hard to remove, I don't mind playing the range, right? I'll look at the range-bound price action here and just put a box around it for you. While we did break the all-time highs, we closed pretty much right at it, right? Yeah, there you go. You're pretty much right at your all-time high. So if you are thinking of making a trade here, you really have three different things that you could do. You could short the high of that range, which would mean shorting right now on Nvidia, which is very risky, obviously, right? Very, very risky. You could wait for the breakout, which technically it happened today, but we didn't get a close above the breakout. So that's option number 2. So option number 1 is trade the range, short the high of that yellow box, buy the bottom, or cover your shorts at the bottom of the box. The second option is buy the breakout. Third would be wait for a retest of a breakout and buy that way. But I'd have a hard time saying to short Nvidia here. I think that the chip shortage is actually going to benefit their profits because they'll probably start raising prices and become much more in demand, and all of a sudden their stuff will be just flying off the shelves even faster. So I have a hard time doing it. If you do decide to short Nvidia here, Keith, make sure you have a stop loss on it. You're shorting a pretty strong stock in a very strong position that is, cemented itself in the industry as being a necessity. This is not a GameStop company that is going to go away the dodo. Nvidia is going to just continue to grow, and to me, their dominance in the marketplace is undeniable. GameStop is kind of a joke in the industry, but it's a place you can go get games. I can go get games at Walmart and Best Buy and any company online. Nvidia, on the other hand, is cementing themselves in industries that are really emerging. I mean, obviously, electric vehicle space. Any of these small companies right now are all getting bought by SPACs because they are EV and trying to come to market as quick as possible. So I'm not comfortable shorting Nvidia here. I'd be more inclined to buy the breakout or wait for a retest of that breakout on Nvidia and look for even higher highs. Let me take a step back on this and look at the monthly, just to see what we look at in the grand picture here. I mean, it has been a phenomenal run, and shout out to Larry Jacobson, and props to him because he was talking about this one. And not only was he talking about it, when it fell back in 2018, aggressively, I was like, oh, what are you going to do now? What are you going to do now? What are you going to do now? Are you going to get out of your position? He's like, no, I'm holding it. My target was 350. I actually want to bring Larry back on because I think initially when we had him on Power Trading Radio, back in 2015, 16, somewhere in there, when he was saying to buy this one, his target was $350, and now we're kissing 600. So, like Jerry says, too expensive. This stock for my liking. Yeah, I mean, remember, you don't have to buy a bunch of it. You're just looking for, if you make 5% on a $600 stock versus 5% on a $10 stock, what's the difference, right? It's still percentage rate of return on your investment. So. I'm curious, we'll figure out from Larry next time he's on the program whether he is still that optimistic, because 350 was his price target, and we have clearly eclipsed that. Larry does a lot of fundamentals. He really loves the Benjamin Graham, Warren Buffett model, where he's looking at the fundamentals, and he's got all kinds of screeners and filters that he likes to use, and then use that in conjunction with supply and demand methodology. So Larry's one of my favorites with regards to that, because everything that we do as traders needs to be tailored to us. And Larry's taken components of core strategy that he really likes, and he's taken that and said, well, I also like this long-term investment portfolio theory, which isn't really what core strategy is about, but uses the mechanisms of long-term investing with Benjamin Graham, analyzing the fundamentals, and then uses the charts for buy points. To me, that's a pretty unique way of doing it. Larry does that very well. I'm on the East Coast, going to Mass. I am, Alan. I'm actually going to be going, hopefully, fingers crossed, headed to Vermont. I am going to see the home place of the artwork behind me. Of course, for those of you who might know, I am, unfortunately, a massive Fish fan, and they're from Burlington, Vermont. It's kind of been on my bucket list, so I might be heading out there with, heading out there. All right, let's see. Let's go to listener questions. And more of them. I have more, so guys, if you have some, send them on here with question marks. So, Keith, hopefully that helped you with regards to shorting Nvidia. I just couldn't bring myself to do it. That said, as a trader, you got to look at things from just the pure price point. It is definitely at a point where you might potentially short it. Just make sure you have that stop loss in place, because if Nvidia breaks those highs, you could see a pretty big move to the upside. All right, I thought I would bring this one up. This is one that's kind of chapped my hide over the years, and I'm not selling anything here, guys. I do this every day for free on my own. You guys have been very gracious over the years and donated money. I appreciate that, but I'm not selling a service, right? There's a lot of people out there who are selling services, for the one individual who I just despise and will never have on this program. All that guy does is just call levels, call levels, call levels, call levels, call levels, call levels, call levels. I could sit here and just call levels all day long, and then just show you the one that works, right? Show you oh, look, I would have made a ton of money. I'm sick of those people. I think that the regulators should be cracking down on them for what they do, because it's like the ultimate con. I could sit here and ramble off, guys, all day. I could ramble off and do a show nothing on but stock picks all day long. And then when one of those 10, 20, 100 comes to fruition, then I will show you the results and say, see how great I am? So I'm not a big fan of doing stock picks. I obviously, I have my trades. I have the things I look for, and I put them out there. And the other side of the reason why I don't do it, if I ultimately charge, yeah, maybe I'll do, obviously part of it would be having picks and much more transparency into what I'm doing in my trading. At this point, we're not there with this program since it's free. But why don't I do stock picks? Because Alex, this wasn't you, Alex? No, it was a different last name, but I just put the first names in here. But Alex says it wasn't me. Hey, there's nothing wrong with asking, Alex. Absolutely. There's nothing wrong with asking. The main reason I don't do stock picks is this. I told you this before. I used to do a thing called the power pick of the day, which is me just going through and looking at something that I found interesting that might be a potential trade for the next day, right? This quote-unquote master level caller that I'm talking about, he'll use levels that are so far away from current price that you actually forget about them. But he won't, because he's got them written down, and he'll just go, oh, see, I told you. Did you take the trade? And no, that person didn't either, if you look at the financial. Anyway, turn him off. Yeah, but you know what needs to happen? It's not just they need to be turned them off. More people need to know about the shenanigans that go on there and why it works that way. So I used to do this thing called power pick of the day, and I would put my entry, my stop loss, my target, and it was really for the next day or two. The problem was I had this entry, stop loss, and price target. Let me ask you guys, type in the chat. If I give you an entry, a stop loss, and a price target, and it meets the entry, are you going to lose a lot of money? Is it something that's going to blow your account? I mean, how could it happen? Right? I've given you three variables: your entry, your stop loss, and your price target. So how is it possible to lose a lot of money? So this one guy started sending me messages saying that he was going to sue me because he lost a ton of money on these trades. And I was like, you know what? I'm trying to be helpful. I'm trying to show the process, the methodology here. And you're now, I go, how did you lose? He goes, oh. I said, did you use a stop loss? He says, oh, no, I'm still holding it. I said, the stop loss was like, 50 cents. You wouldn't have lost much. How is that my fault? So that's why I stopped. I know, Big Ed. Sorry. You get me on my soapbox. It just pisses me off because everyone wants something for free. To me, the main thing we should be doing is educating ourselves and making these decisions ourselves. So, there's three out there. There's actually two today. There was one that I looked at. There's two for today. There's one that I was looking at for today's trading that actually came to fruition, but unfortunately I got called away. I had to run into the studio this morning and shoot some stuff, so I didn't get a chance to make this trade. It was kind of frustrating because it would have been a nice small winner for me. Right, Jerry. Stop entry target. Yeah. As Ron White says, I can't even do the Ron White. Actually, we're not censored. I don't know if you guys have ever seen Ron White, but he's like, my wife. He's got his little glass of whiskey on stage. He's like, this isn't whiskey today, by the way. My wife, she's got fake eyelashes. She's got fake teeth. She's got fake butt. My wife, she's got fake boob. But you know what? You can fix all of that. But you know what you can't fix? You can't fix stupid. I love Ron White. It's such a good one. Anyway, my stand-up routine is over. Let me just show you two that I'm keeping an eye on. One of the filters I love to run every day is for shooting stars and hammers. That's the simplest thing that I like to do. It's very easily just run a scan, and I just click on them and look and see, is it possible? Do I like it? So I'm going to look at two that came up on my radar for other criteria, not shooting stars or hammers, but I think you might just keep them on your radar as well. First one is DD, right? This is Dupont de Nemours, or whatever you pronounce it. I actually like this from a bullish perspective. The one thing I'm not a big fan of is you look at the volume here, right? We have a breakout from a demand zone that goes back into January, and then I'll map it out for you. This is something I'm keeping an eye on. You're right in that demand zone right there. And if we were to throw on some lines, you'll notice we're sitting dead center of it. So I could have bought some today, but I'm not quite comfortable knowing the rate of change here, meaning the acceleration of DD to the south side. I'm not comfortable catching that falling knife yet, right? I'm not I'm not a fan of it. However, if we start to see some stabilization tomorrow and it starts to move back above, let's say $72, yeah, I'm probably going to be a buyer of that one, right? And because basically what you have here is an uptrend with an aggressive pullback, and now it's happening on high volume, which tells me that there's conviction there, which is why I want to wait for it to confirm that level is holding. So that's DD. The other one that actually looks better than this, it's almost the same. I'm going to see if I can put these side by side and ask you guys to tell me why I prefer Insight better than DD. And I'm going to put them side by side here. Let me copy this window. Bear with me. I do all this stuff live. It'd be nice to have a whole studio of people doing this stuff for me, but unfortunately I got to do it myself. Okay, so here is the second one. This is, well, it's INCY. Okay, so there's Insight next to, the candles just don't look the same. So there's your daily, and there's Insight on the right, DuPont on the left. And there's one thing that makes me like the one on the left, or the one on the right more. You guys know what it is? Can you see it? Does it pop out at you? I mean, there's pros and cons to each one of these, and I could go through both of them and kind of explain what the thought process here on why it is. But I'm just curious if you guys can see why I would like the one on the right a little bit more than I do the one on the left. DD close at the low of the day. That's good, right? But that definitely shows you weakness, which means that for tomorrow it could potentially be that one that I'm looking for, that stabilization and a bounce up tomorrow. But the price action, yes, Alan knows me. Says you like volume. I do. I see. For the one on the left, it averages 9 million. I like that better because the sheer amount of volume means it's got a lot of liquidity, a lot of activity. I like that better. What I don't have for today on this big sell-off is climactic volume, right? It sold off aggressively. I'll make it full screen for you. You can see it sold off pretty aggressively, but the volume was relatively low compared to what it's been doing. So to me, that makes me a little uncomfortable with it. I like to see if this red candle, the last one you see on DD, had huge volume. Oh, I may have actually bought it today because I love to see the climactic stuff. I love to see people panic. Now look at Insight. Insight has had 2 days of aggressive sell-off and volume is double what it normally was. Not saying that's climactic, but it's certainly a big increase, which tells me that people are freaking out. And it's a very similar picture, right? We could just draw a little yellow box in there, and basically I am pretty much in that zone as well on Insight. So these are two that I'm keeping an eye out from the bullish side. I didn't really see much on the bearish side, unfortunately. So I just have to, if I'm going to be day trading tomorrow, which looks like I will have some time to do, I will be shooting some videos in studios. We're working on the Forex on demand, which is going to be a lot of fun. I'm hoping you didn't lose sound. Did you lose sound? Lisa says, did I lose sound? I'm hoping not. My microphone is popping here, Lisa, so I'm hoping that all the sound is okay. But anyway, each one of those two, DD and Insight, both look like potential buys. If you look at DuPont, DD has a nice smooth pullback during a bigger uptrend. I like that setup better. I like the overall volume better on DD as a trade for tomorrow. But I like the climactic volume, the big spike in volume as we came into a demand zone on Insight. Now those are two things that I'll be looking at. And here's one that I was keeping an eye on today, which was IT. Information technologies. No, I'm kidding. It's Gartner, right? The only reason I didn't really have much confidence in Gartner, it came up through a filter. It had a beautiful shooting star yesterday, but the volume was really low. So I was actually very, very, very skeptical just because of volume. But you had a shooting star on volume that was about 3 times normal. I like that. That to me was one, if this was trading at least 1.5 million shares on an average, then I feel much more comfortable in it. To me, it looks like that gap is going to fill here on Gartner, but the volume's just not there. I know I can't touch Insight. Is Insight? Yeah, it is. It is drugs. I can't buy it. Can't buy it. You guys know me well. But those are two I'm keeping an eye on. DD I can. Big Ab, I can touch DD. So I'll let you know on tomorrow's show if I happen to hit on DD tomorrow. I'll have my level in there right above. That's 7.2. Oops. Come on. Wow, what's it taking so long for? We just had this chart up. Yeah, right above 72. I may actually go if we open up tomorrow and it stabilizes in that 70, from 70 to 72, I may actually jump in early. As I mentioned, I could be waiting for the breakout above this line, but if it opens up tomorrow somewhere in here, I may buy early and just keep my stop loss right below 70. If it gets below, let's call it whatever that line is, right around 69, 70, that seems like a logical stop loss point for me. But it really depends on where this thing's going to open up tomorrow. All right, how much time do I got left? 40 minutes. All right. So, Alex, no, I don't do daily stock picks, but every now and again, I like to share trades that I'm in or positions that I'm in with you guys, and I do that pretty open and candidly. So, yeah, there you go. All right, here's one from Lisa, and there's two on this one. I think it's important, especially if you guys have complex trading lives, that you get the right CPA in there. Lisa says, I've grown a lot in the past 12 months, even more so in the past 3 to 4 months. Actually, no, this wasn't Lisa. I think there was two that were basically about this one. two were almost in the same thing. I think I just copied the wrong name over. But Lisa and another individual were asking me about LLCs, starting the entity, and where to start. Lisa specifically wanted to know if I would give her the name of my tax guy. I contacted my tax guy, and he's like, I'm slowing my business down. I'm going to be retiring, so no new clients. Which is, I'm glad he'll keep me on for a couple years. I don't know how long he'll keep me on, but what I would do is, if you're an OTA student, just go to OTA Tax Pros. That entity was set up specifically for Traders Taxation. I know it sounds like a gratuitous OTA plug, but when you have a tax firm that is designed for traders, and they're attached to on the Trading Academy, which is doing the business of training traders and investors, they're the one. That's the place to go. Now, the gentleman who originally asked me this question, which was about the LLC, that's a totally different ballgame. I definitely think it's in your best interest to open up an entity, number one, to shield yourself and protect yourself. Number two, there's a lot more that you can write off, deductions that you can take, from education to travel, business expenses, a lot of that, you can write off more per year. So to me, it's definitely the way to go. But the combinations of an LLC, S Corp, C Corp, the structures, the nesting maybe of multiple, that's something you're going to have to talk to a tax professional, because it needs to fit your personal setup. I'm fairly simple for now, but I'm noticing I'm starting to get much more complex with other investments and real estate and things like that, where I may need to structure a different type of company to accommodate those needs. So I would definitely couldn't help you last time. Are you talking about oh yeah, they're for Americans? Yeah, Brendan, if you're shopping around, bottom line is you should just ask them specifically about trading. Say, what do you know about Traders Taxation? And know the basic rules of Traders Taxation, and say, hey, can you guys answer these questions for me? If they can't answer them, then you just simply move somewhere else. What am I shielding myself from with an LLC? Assets, legal, right? If someone were to sue you, then those assets would be part of the corporation. So there's one way. It's limited liability. Not that you can do anything dangerous in the LLC, but there is a legal protection there. One of the reasons I started a C corporation was the healthcare side of it. At the time, I was paying my own healthcare, and that was 100% write-off in a C corp, not in an LLC. But there's all these different benefits to each one of them. I am not a tax professional. That said, let me write that down. Maybe I'll get OTA Tax Pros on here to talk a little bit about the right way, or at least offer some basics of structuring, and certainly the taxation side. There's even different instruments. Like, why would you want to trade futures? Because you get preferential tax treatment there, 60-40 tax treatment benefit, long-term versus short-term capital gains on futures. Makes it very exciting for everybody else, for people who are trading the futures markets. All right, Liza, and I forgot the gentleman's name who sent the initial question. Go to OTA Tax Pros would be my suggestion for you on that one. There's also a company called, I think it's called Green Trader Tax. I've heard good things and bad things about them. Thomasina, do you use OTA Tax Pros? Yeah, big app. I made a note. I'll see if I can, and it doesn't have to be OTA Tax Pros. I just know them. I know some of the staff there, and they're just really good people that are like bending over backwards to make sure that it's the best experience for the customers, and to me that goes a long way. But there's Green Trader Tax. There's a couple of other ones out there. Just do your research and be careful. Tax is a big issue. All right, I'm going to keep going here. I thought this one would be good. And Alan, I'm not sure if you are here with us today. Oh, yeah, there he is right there. Okay, Alan says, I'm wondering if there are careers or jobs I can transition into that would complement trading. I'm starting to feel prop firms aren't the way to go because, for one reason or another, even the legit ones have a 10 to 20% retention rate. I've considered being an analyst, but as a chart trader, that would actually take away from my time looking at charts. Do you have any suggestions on how to merge passion and desire to develop as a trader with a full-time job? I think part of what you need to do is move into an environment where you are amongst the people that you want to be like, meaning in the trading world. I was very fortunate with regards to that because with OTA, I took classes. And then ultimately what I did is I started to immerse myself around the other traders on the floor, and then the trading floor went away. And then I was actually helping the instructors. And I was basically being an assistant teacher for a month, and then all of a sudden I was teaching the class. So to me, if you can be a teacher of the assets, you probably know what you're supposed to do. You know how you're supposed to do it, but a lot of times we break down in our own discipline because we're left to our own devices at home. And by being a teacher of it, it really helped me enforce my bad habits, or to not enforce, to identify and say, listen, I'm telling you to use stop losses, and here I am not using stop losses. I'm telling you to trade small share size, and here I am trading 6,000 shares of a highly volatile internet stock. That was my early days of trading, and I found that being a teacher or helping with an instructor, even if it's just volunteering, you kind of solidify the principles, the discipline, the money management that you need to be successful in the financial markets. I would find a community. We've tried to do a really good job of creating that community at OTA, whether it's mastermind community, there's clubhouse sessions, but creating that environment. Now, if that's not an option, there are meetup groups in local areas. Only problem I have with that is usually when you go to these types of meetup groups, you have a lot of individuals all pushing an agenda, and they may not have the same basic methodology or mindset from a trader that you do. So you kind of have to accept the good with the bad when you talk about these, whether it's a Wall Street Bets type of chat room or whether it's, some meetup type of group. But you need to find a way that you can get involved with a community and hopefully get paid along the way to do it. Then that learning process becomes quicker. And to me, that would probably be my best recommendation. I think that that's probably the single best piece that helped me over the years. If I just took my class at OTA back in 1998, which I was in June, I was the June 1st class of 1998. If I just did that and then left and went home, I don't think I would have made it. I really don't. I think I lacked the discipline. I had way too much ego. I probably would have blown multiple accounts and just said, to the hell with it, I'm done. Instead, I was around that environment, and that environment saved me because I could see what good people were doing, I could see what bad people were doing, and when you see that happen regularly, I can say, all right, well, I'm going to gravitate more towards these guys who know what they're doing and are making money, and that helped me build my style, my technique, and all that type of stuff. So that's what I would do, Alan. I would see if I could find a way to get involved with a community, even if it's working with the school as support. Right? Maybe you do student support at one of these guys. You don't have to be a professional trader to be student support, but you're still involved in the community. And there's a lot of these firms out there. I bring a lot of guests on the program from a lot of different schools and companies out there that some of them are doing good communities. Others are, not great communities. But I think that's probably the most important factor I would say is immerse yourself with a community. And there was a colleague of mine years ago, and he used to do the workshops, and the workshops, it's a sales process, let's be honest. And you're going to learn something, but really they're saying, hey, you need to come and trade with us, or learn from us, right? Come and take the class, sign up. And salespeople, they're all based off commission anyway. We all know that. And I hate salespeople. I apologize, but salespeople are just pushy. They'll say whatever they want to get the sale. This guy used something I thought was kind of funny. I sat in one day because I knew he was, he wasn't the best person in the world, we'll say. And he started off with a statement I actually really like, and I think it's very pertinent to what we do. He says, who do rich people hang out with, guys? Just curious. Who do rich people hang out with? You're probably going to see a pattern here when you see rich people are going to hang out with other rich people. Who do, let's just say scientists hang out with, right? Other scientists. Who do engineers hang out with? Maybe other engineers. And his point was, who are you hanging out with? All these people in this room, who are you hanging out with? And it's like, well, I'm hanging out with this person. Are you hanging out with traders? Because if you are, not hanging out with traders, you want to hang out with traders, right? That's you. If that's the craft that you hope to desire, the profession that you want to get into, then you better start hanging out with those people. So, to me, that one really resonated as a truth, right? I think that if you ever want to get better at something, I'm not the best trader in the world. I'm good at what I do, but there's people who are so much better than me, and I have no ego in it. Great. You know why? Because I like to hang out with that person and learn from them. If I can get new tricks, that even doing this for 20 plus years, if I can find ways to just make my results 0.0111% better, great. It's always an improvement game. Yeah. All right. Let's see. What did Coach say? Scott Stokes is the most honest instructor. He shares everything without hesitation. Oh, okay, fine. Well, let's just go watch the Scott Stokes show then. No, I'm kidding. No, Scott Stokes is awesome. I actually reached out to him. I'm trying to get him on the program because I love Scott Stokes as well. He's great. Yeah, exactly, Okanola. Birds of a feather flock together. That's the common phrase. So, Alan, that would be my big thing is just try to find a way to get involved in a community and go in there with your guard up, because a lot of times that community is pushing an agenda or a strategy or trying to get you involved somehow. You have to figure out, what do I want out of this? And then I would go and pursue that, but cautiously. Right? Because you're going to hear from a lot of people over the course of your trading career who say that they're amazing traders, right? And show you a bunch of trading statements that are probably fake. And they're not good traders, right? All right. Yeah, Big Eb says, hang out with people better than you at your craft and you will raise your level. If you look at what Zuckerberg did, I saw a great interview with Zuckerberg and Mark Zuckerberg of Facebook. And they said, hey, you just hired this lady and this lady and there as your whatever the head of the company and things like that, major directors, and they asked him, she says, are you intimidated? Because these people, these are some of the best out there. And he goes, no, it's exactly why I hired them. He goes, these people know stuff that I know nothing about. They're going to make me better. I'm going to learn so much. Why not learn from the best? And he goes, yeah, I paid a lot of money for them, but I'm expecting them to do great things, and I'm going to learn along the way and make myself better. Exactly the way we should approach trading. Good, Randall. You're probably doing the right thing, especially if you read to page 19 of the initial FTC lawsuit, where it specifically says that he doesn't make money. He traded very little over the past 2 or 3 years, and he doesn't make money. Okay, great. So then stop showing me pictures of all the trades that you're making money on his Twitter feed today. Look at these trades. Made tons of money. Go away. So the SEC would shut him down. Okay, let's see. Let's look at your economic calendar there was earnings today, which I think was good. There was 2 numbers on that one. If you look here, you've got General Motors, right? General Motors came out today. They had a pretty big earnings beat by 19%, and they sold off. Oh, okay, great. You had Coca-Cola, which you would think would be doing well. Got to mix your cocktails with your Jack Daniels, right? Well, they beat earnings as well, and they were down just a little bit. Now, that was for today. I'm going to look at the economic calendar for tomorrow and also your earnings. Here's what you have for tomorrow. And tomorrow is an interesting one because you have the unemployment claims. They have been, again, every week getting lower and lower and lower, which obviously is a good thing. I think at some point here in the near future, we'll talk about the potential for a huge melt up in the financial markets like Jeff Manson was talking about, and that's probably going to be looking at earnings. Last year, part of the reason I made that really big trade was my expectation were the earnings were going to suck in Q2, and they did. But they all lowered their forecast, so it was kind of priced in already, and it messed me up. Right now, we're seeing a little bit of a reprieve with COVID, right? We're seeing the vaccine going out there, and 9 or 10 million people have the vaccine right now. If we start to get back on track as an economy, that coupled with the trillions of dollars that the Fed and the government has pumped into the economy, you could all of a sudden see these numbers flip around and things just skyrocket. That's the potential out there, which a lot of people are talking about. Of course, the more people that say that, the more likely it's going to go down. So that might be an interesting show topic down the road. Really, for tomorrow, it's all about the British pound, though. You can see we have the 30-year auction for the U.S., but look at the British pound. At 11 p.m. tomorrow night, so after we do this show, you've got GDP, construction output, goods trade balance, industrial production, index of services, manufacturing production, preliminary business investment. Whew! It is a big, big list of stuff going on for the UK tomorrow. So if you trade the British pound, keep your eye on that one, as you guys have seen with the David Warner stuff. It has been, I'll bring it up there, a pretty good run for the British pound, and it's still moving. So, this could be something that either accelerates this move or continue, or we'll pull it back and sell it off for just a little bit. But just be cautious tomorrow night because of those announcements. And finally, on the earnings side of things, let's check out earnings for tomorrow. This is, we've got a connection problem. Let's just get rid of all that. We'll close that. Disney reports earnings tomorrow. You also have ACB. For some reason, I thought they reported on Monday, but they didn't. That was Cannabis. So ACB reports earnings after market close. So I'll read you all the ones that are going to be before market open first, and that's Kraft Heinz. We have CyberArk Software, Duke Energy, and PepsiCo. Remember, Coke didn't do so well today. Maybe Pepsi will follow suit. And then you have after market close, Disney, Aurora Cannabis, Illumina are some of the major names. There are a lot more than that, of course, reporting tomorrow, but just check your earnings calendar so you don't get caught off guard. I usually cherry pick the big names. Aurora, I think, will be a big one. My concern with Aurora for tomorrow, and we'll bring up the chart of ACB here right now, is these companies, these stocks have had a huge run up recently, and I think that they may be overpricing in. So you have a couple companies report earnings and the huge optimism in the cannabis industry. Careful, because if you come out of the tail end of earnings season after the whole sector has moved up, 50%, 80%, 100% in just a couple of weeks, then all of a sudden you may be overpaying on those earnings, and that's when you get a gap up and it rips back down. So I'd be careful there with ACB tomorrow. I didn't show you the chart. There's ACB, and you can see a beautiful jump up today, a 28% gain. Remember, their earnings are supposed to be tomorrow, but had a nice big move up today. All right, guys, that's going to do it for me for today. Thursday, which is tomorrow, may be a solo show. I have a feeling we'll probably have Don Fron on the program. I'm pretty excited to have that. So you guys have questions for me, feel free to send those on in. You can always send me questions at TraderMerlin@gmail.com, as you can see on your screen here. If you want something specific for us to discuss, let me know. Send them on in at TraderMerlin@gmail.com. I'm happy to discuss it. If you are new to the program, as I think we do have a few new people, hit the subscribe button. Also, if you like today's show or you just want to give me some support, click that little thumbs up there on the Facebook page. And of course, if there's something that you didn't like, there's things that you want to talk about or want to address with me, you can always email me at TraderMerlin@gmail.com. Till then, happy trading, everybody. I will see you mañana. Take care.